Hello, and we are going to go over some lender documents. So this is a big stack of lender documents. We're going to go through them quickly. Kara, I have them all right here. Right? So there's like a lot of documents here.
Yes.
And we're going to go over them.
We're on a timer, quickly.
And if you are still watching this video, you are extremely detailed. You have an extreme attention to detail, and you want to know a lot of things. Yes. And we're here for you. So, Kara, let's hit this from the top. I'll flip over and show some stuff here, and you're going to start and go ahead.
Okay, so these are just, we call these the lender junk documents.
On the screen.
There's a big thick stack of documents, and these are just kind of the standard state of Texas forms that you're going to sign in every single lender packet, no matter who your lender is, who your title company is, what house you're buying, you're going to sign these forms. And these are just their generic standard Texas forms. And this top one right here, this is your name and signature affidavit. And these have all been redacted. But on here it says my name has appeared in various forms on my credit. Basically, this is saying that these are all your different aliases, all the different ways that your name has appeared before. It could be your married name. It could be your maiden name. It could have your middle name. It could have an initial. It could be a typo where someone fat thumbed your name when you bought a credit card at Old Navy 15 years ago, and now it's permanently on your credit report as an alias. So that is always a stickler. People see that and think, wait a minute.
All right,
that's not me.
Kara, I'm going to have to boo you because you said you're going to go through this quickly.
Okay.
And that was like a super long explanation
but
on
it's
a very simple document.
This one does throw people because it could have a misspelling of their name and they're refusing to sign it, saying that's not me.
Okay, let's keep going.
But you sign it, yeah. It's you at some point. And these do have to be notarized, and there's two in here because there's one for yourself and for your spouse.
You don't have to talk faster.
And then, am I talking fast?
Yeah, you do. You like Micro Machine.
I get real good. I get going. So this is your escrow breakdown. This is broken down. Really, you guys talked about it a lot on the closing disclosure. But this right here, this has that lump sum part of your closing cost that is going into your escrow account. Your escrow account's that separate little savings account that's part of your payment.
Do you want to talk about the aggregate adjustment right now?
Yeah, we can talk about. I'll talk about it.
No, you were supposed to skip that part because that was an item that was confusing people.
Okay.
You don't want to go over that.
I won't go over it then. I know, I'm failing here.
All right, keep going,
this
Kara.
Just has this $965. That is what you're paying into your escrow account every month. Every month, this scenario, there's private mortgage insurance on this loan, so they're going to pay that out of the escrow account every month. In December, they're going to pay out the property taxes, and then in April, they'll pay out your homeowner's insurance again.
So this is a schedule of the payments in and out to your escrow account.
Correct.
Perfect.
And then this next document here, this is your first payment letter. Again, in this scenario, the first payment is due on June 1st, and it, again, just has the breakdown, the principal and interest, which is a fixed rate. This scenario has private mortgage insurance on it, the homeowner's insurance, and the property tax portion, with the grand total of your full monthly payment.
Okay. And the reason they give that to us is because the first payment, just so we know what's going on.
Oh, correct. I'm sorry. I was like,
it's
your first payment. You got to have it. But what's this next document is the temporary payment notice. So what happens a lot is your lender will sell their loan to Chase or Bank of America or Wells Fargo or a big lender that services loans. And so you have your first payment due on June 1st in this scenario. And then these are some temporary payment coupons saying that we may sell this. Just in case we haven't sold it by the time you make your first payment, here is where you will make your first payment. And they're old school where you cut along the dotted line or cut it in half, mail it in with a check. And then once it gets sold, you can set up online payments.
Yeah, and what they're looking for here, people, is they want to make sure that no matter what happens, there's no excuse that you're going to make your first payment on time.
Correct.
You know exactly where to send it. There's nothing going on there. If something weird happens, send in your payment. They'll rectify it. They'll give you a prorated credit. They'll take care of everything. Just please make your payments on each month. Don't worry about all these different things, but make it to the correct place.
Correct.
That would be really, really nice.
That's important.
Okay.
The acceptance agreement, hold harmless. This is basically all repairs and everything have been done on the home. So you're accepting the property as is. Everything has been negotiated. The title company has sent out their commitment. They're ensuring the title that there is a clean title, and they're accepting the survey or getting a new survey if it was needed. The borrower certification authorization, this is just saying that you are you. You didn't steal anyone's identity to apply for this, and that no one forced you into using your loan officer. You picked them on your own free will.
Now, we might have recommended somebody.
Well,
we like to highly endorse people
Yes.
that are really, really good at what they do.
Yes, but you weren't forcing them.
No, we never do that.
And then this is just the real estate certification. Again, the buyers and the sellers sign this that, to the best of your knowledge, the facts of the sales contract are still valid. And then this is just the 4506T. This was just the request for your tax returns. This has all been done. This was part of your application. Whenever you filled out your application online, you clicked a box that's saying that they could request your tax returns to prove your income.
All right, hang on here. So, whoa. Let's make sure, Kara, important point from Mike, and we're going to drop a knowledge bomb here on this one.
Let's do
it. Do not quit your job. Okay? Do not quit your job prior to moving in. Your income is going to be verified. Your employment is going to be re-verified, often on the day that you close.
Yes.
Okay, so do not do anything crazy. Do not go out and start buying tons of furniture. Do not do any one of those things. Don't buy a car. Don't get crazy. Just relax. Once you close, once you get the keys and you do that, then you can go ahead and do whatever you would like to do.
Correct.
Okay.
Correct.
Good. All right.
I like that knowledge bomb.
That was a good knowledge bomb?
That was a good one.
Go ahead. Continue on here. 4506T.
Why there's two of these in here is because the husband could have had one in his name and the wife had one in her name. Sometimes you'll have three. You'll have a separate one for the husband, a separate one for the wife, and then a joint one, depending on how you do your tax returns.
Wow, that was really good knowledge. That was good. I just hit the bomb, so I'm not going to read it.
Okay, don't read it. And then this was, again, the request for your taxpayer ID. You're going to make sure right in here that your social security number is correct. And there'll be one for both parties, both spouses. And there's several pages. I'm scrolling quickly because it's a government document. So, of course, there's multiple instruction pages behind it. And then this next document is the flood certification. The lender is going to require that the title company does a flood certification check to make sure that you are not currently in a flood zone.
And if you are,
you will be required to have flood insurance.
Do you have flood insurance on your house?
I do not. I am not in a flood zone.
I don't have flood insurance either.
Special flood insurance. Let me specify that. You can have flood insurance and special flood insurance for people who do live in a flood zone.
Whoa. This sounds like you know something here.
Well, anyone can have flood insurance on their home, but if FEMA deems that you were in a flood zone, then you are required to have special flood insurance. It is literally called special flood insurance.
Okay, that's fine. I actually don't know anything about this, so thank you for bringing that to the table. Continue on.
This is the lender's errors, omissions, and compliance agreement, just in case they've left out a document, they're missing something, missing a signature, that you'll help them get it signed. This is the collateral protection insurance disclosure. This is one of many documents in here that they're making sure that you know it is your responsibility. You have to have insurance on this property as long as there is a note. And then this is the fraud notice that you can go to jail for 2 to 99 years if you've stolen someone's identity or falsified all of your information, lied to your loan officer, gave wrong information on your application to obtain this loan. And
where that's probably going to come up here is when they do that 4506-T. That's where it's going to come up. So if you did something really, really shady, we should talk about that first. But because we probably don't need to use that lender ever again, and we don't need to have any of those things. So fraud has been dramatically cut down in the industry.
It really
and
has.
What's really happened is because we're able to have this document here, a lot of things are verifiable. There's a lot of different clearinghouses for the information now, and we've been able to cut down on that. So you're not going to be serving 2 to 99.
Hopefully not.
That's a long time. No,
and with a fine not to exceed $10,000.
Oh, I'd rather pay $10,000 than go to jail for
right?
2 to 99 years.
Or maybe you get the lenient judge, the 2-year judge, not the 99-year judge.
I don't know, but let's just avoid that.
And this is just saying that they will report you to the credit bureau if you miss a payment, which should be common knowledge, but somewhere someone sued.
Okay.
And now there's a document. This is just the notice to home buyer. This is only on documents that are FHA documents, and that even though this is backed by a government entity, FHA, it is still your responsibility to make your payments. And this is just your occupancy certification and financial status, that you plan to live in this home as your primary residence and that your financial status has not changed, i.e. you did not quit your job.
All right, and the reason that this comes up here, right, is because how you qualify for your loan and what you say you are going to be doing, you're reaffirming here. So you're going to get a better interest rate if you're occupying the property as your primary residence, and you in fact are living there. There's less risk. Now, some people get into this situation where they're like, oh, I'm going to buy this house as an investment property, and I'm going to lease it out. Now that should have a different interest rate associated with it because that is a different risk profile. So in that particular scenario, you would not have it as your primary residence. You would have already told that to the lender. They would know, they would correct it. You would have a higher interest rate and you would disclose that here. And the other item would be
your financial status, that you have not lost your job, quit your job, been given notice that your job is going away.
Okay, continue on.
And then this next one, this is again that to the best of your knowledge, everything that has been in the sales contract dated, in this case, March 13th, is still valid.
There was nothing that went on behind the scenes. There's not anything shady going on.
Correct.
Okay.
And the buyers and sellers will each sign this separately. And then did we skip? This is a duplicate. This is in here again. And this is that it's important to not commit loan fraud and that no one forced you into using your lender. And there's the signature page. And then this is the loan agreement addendum. This is just saying that there are no oral or written agreements between you and your loan officer outside of these documents, that these documents represent the final numbers and figures for your loan. And the address certification, this is normally going to be standard. People are living in the home that they're purchasing. This would only come into effect if this is a rental property and you want mail to come to a different address other than the home. You would notify here, note that you want it to go to a different address if it was a rental property for you that you were purchasing. The amendatory clause and escape clause. Now this is because it's FHA. If the home does not appraise in an FHA appraisal, you can get your earnest money back.
But the appraisal already took place.
This has already happened. This is just a refresher document reminding you.
Okay.
That's already happened. We wouldn't be at the closing table.
Sounds not necessary,
not
but
necessary.
Yes. All right, let's go through this.
This is the appraisal valuation that you received a copy of your appraisal at least 3 days prior to closing, unless it was waived. This is the acknowledgement that the lender was in compliance with the credit score. You know they ran your credit and you received a copy of your credit score. This is the FHA appraisal certification and acknowledgement, again, that you received a copy of your appraisal. These are just facts, what they do with your information. There's nothing to sign on here. It's just kind of nice. The lender sticks it in there. So what they can and what they can't share about your personal information. And then the mineral rights acknowledgement and agreement. More than likely in the state of Texas, you do not have your mineral rights on it, but this is just saying if you do or if you don't, the lender doesn't necessarily care. You have to notify them in writing if you plan to drill for oil in your backyard.
Okay. Let's go on. That was pause for effect. I hope they got it. I really hope they got the effect I was hoping for.
This is the attorneys that drew up these documents. This is their representation letter. You are paying them as part of your closing costs, but they are not your attorneys. They represent the lender. And then this is your Texas disclosure, your T64. This is kind of a breakdown again of the title insurance, all the fees. All title insurance premiums are standard in the state of Texas. In this scenario, the sellers paid for it. And then this just kind of breaks down and shows all the different title endorsements.
There's a lot of fees in the title business. You guys just have endorsements galore.
Well,
Yeah, that's a true statement. She's like, yes.
True statement. And then this is Fidelity's, these are our title junk documents now, what we call them. These are the affiliated business agreement that Fidelity National Financial owns National TaxNet, and that is who we use to verify that there's no tax liens on the property. And then this is just the buyer and seller information sheet that we have you fill out. And then this is our errors and omissions, so just in case we've missed a signature or a date or initial, if we're still needing something, you'll help us get it signed. And then this is the tax agreement that, again, Morgan talked about it earlier, Mike talked about it, that taxes have been prorated. And this is that if, in fact, it comes back at the end of the year and taxes were higher or lower than what the prorated amount was on, It is between the parties to go back and they can request for that refund from either the buyer or the seller if there was a difference in the prorations.
Most likely the number is not large enough that this actually occurs.
Correct.
So.
And then these are Fidelity's closing documents. So everything you have signed or received from the title company, you're now initialing that you have signed it or received it from the title company. So this is the waiver of inspection, this first one. This is that you have done an inspection on the property, but Fidelity has not come out and inspected the property. And then these next two normally do not apply to traditional resale transactions, whether you're rejecting a title policy or a premium pass-through. That's really done with investors. And then the receipt of the title commitment, that you did receive your title commitment, either the acceptance of a survey or an unsurveyed property. In a resale transaction, there will normally be a survey. And we email you that survey out ahead of time as well. And then there will be one in the packet for you to look over. And then property taxes, again, have been prorated. Tax exemptions, this is where we talk about homestead exemptions. It's very important to file your homestead exemption. You want to talk about that? Or do you guys talk about that outside of this?
Oh, no, we always talk about it. All
okay,
right,
let's talk about
homestead exemption. All right, so homestead exemption, file it.
It's important. It is free. You're going to get a ton of stuff in the mail saying for $30, we'll file your homestead for $40. It's all a scam. It's free. You do it yourself. You do it online. You'll just have to update your driver's license to your new address, showing that is your home. And I'm sure that they'll send you out some information to remind you. You can only do it. It's January through March of the year following when you purchased your home. So in this scenario, this home was purchased in April. You'd have to wait till January of 2020 before you can file your homestead. And why it's important is it gives you a discount on your property taxes every year, which will save you $300 or $400. But what is really important is it caps it year over year. So let's say your home appraised for $300,000 this year, and the next year in this crazy market, it's appraising for $375,000. You're not having to pay taxes on that $375,000. It caps it at 10% year over year. So the lifetime of you owning this home, this can save you thousands.
And Texas is also a homestead state. There are several of them in the union.
Mm-hmm.
And it also protects you in the event of some bankruptcy situations, and you have a bunch
or lawsuits.
Yes.
Mm-hmm.
So that's really, really important for those other reasons as well. So if you get into a really sticky situation, that's super, super helpful on your primary residence.
Mm-hmm. No one can put a lien against the property unless it's something to do with the property, like a roof. You have a roof put on and you don't pay your roofers. They can put a lien on your property.
Correct. All right, keep going.
And then homeowners association, that has already been transferred, put into your name. The resale certificate, that was part of the closing fees. That's already been paid for. And then these are the AKA affidavits. These names have been redacted in here, but this is just saying, say, my name is Kara Stoner. My driver's license says Kara Lynn Stoner. And so I would say that Kara Stoner and Kara Lynn Stoner are the same person.
Okay.
And then there's one for each spouse. That's why there's duplicates. And then these are just, again, the attorneys that drew up these documents. They're not your attorneys. And that is it.
All right, so that concludes all these documents here. There's a bunch of things that you sign at closing. These ones you probably don't have all that many questions about. But if you do, make sure that you talk to the title company in advance. If there's anything weird that's going on, make sure that we know about it, right? Any changes. Your agent should be present, and we can go over things in advance. If we do need, then we can schedule things remotely, right? We have all types of options. And we want to make this as easy and as simple as possible. Hopefully by giving you this video and putting it out there in advance, it allows you to digest it, sleep on it. You should have most of your documents from your lender should be there 3 days in advance, right? These are things that you had to have seen 3 days in advance. So if they do their job correctly, you would have already seen this and probably already went over this. But we want to make sure that you're comfortable. Then we can talk about possession, okay? So possession is going to be determined based on closing and actually funding and completing the transaction. Depending on what time of day you're working on here, it could be a little bit different. It could be today or it could be the next day, depending on a few things. And then the keys, right? So the keys, the agent and the other agent are going to get together and they're going to find out where the keys are, what they are. Maybe they're giving them to the title company. There's a lot of different options here. But basically consult your agent and you'll find out where the keys are. Probably the other items that go with the property are probably going to be at the property. We're going to do our best to do those types of things. So like the warranties, you might have separate extra keys. You might have,
Garage door openers.
Garage door openers, those are really good ones.
Mm-hmm.
Those are probably going to be left at the property. We try to leave them there so we're not carrying stuff all over the place, but it just kind of depends, right? So we'll coordinate all of those different things. If there's a lease back, we'll work through that. We'll go over it.
Mm-hmm.
We'll make sure we understand what that is. If you don't know that word, then you probably don't have one. And that would be about it. But if you're moving, I hope that it's not the summer for you because it's most likely hot outside. You're going to have a long day. And that's about it. So yeah. Good luck. Congratulations on getting this far.
It's very exciting.
No, it's a really big deal. And that's kind of the part of it that really warms our heart after the whole transaction's over, is that we get to, celebrate the fact that you had a nice closing, celebrate a huge milestone in your life. Not everybody gets the opportunity to purchase a home throughout their life, so it's an important one, and you should recognize it and celebrate that.
And
fact.
take a picture. Take a picture at closing. A lot of people are like, oh, I don't want a picture. But then they look back in like 10 to 15 years.
And they wonder,
look at this. This was when we bought our house.
And it's a picture of you or a picture of them?
No, picture of them.
Oh.
Picture of them.
Okay, not a picture like who was my title agent?
No,
okay.
Not a picture of me.
All right, so now we understand. Take a picture of them at closing with your agent.
With your agent and maybe your lender.
Okay, sounds good.
You'll like it years down the road.
Thank you very much. Have a great day.